Welcome to this deep dive. We're jumping straight into the numbers today.
Yeah, we're looking closely at the latest from Salesforce.
Specifically, their first quarter fiscal year 2026 results.
That's right. We've got a detailed financial analysis here based right on their Q1 earnings release and the SEC filings.
Gives us the raw data.
It does, but the real goal is unpacking it, right? Figuring out what these numbers actually mean.
Exactly. Our mission is to sort of cut through all the financial jargon and pull out the really key facts, maybe some surprising details, and, the underlying trends.
Especially around their big push into AI, which everyone's watching.
Yeah, we want to help you get a quick handle on what's driving this massive, cloudy software company right now.
Okay, so let's start with the big picture, the executive summary from the source material.
The highlights.
Yeah. Total revenue, $9.8 billion for Q1. That's up 8% year over year.
And the analysis really flags this. That wasn't just hitting the target, it actually exceeded their own guidance.
Across all metrics, too, which is, a pretty strong signal.
Definitely. What about profit?
Profitability looks quite solid. They maintained a non-GAAP operating margin of 32.3%.
That non-GAAP figure is key for analysts, right? Stripped out certain things.
Exactly, like stock-based comp.
Yeah.
Gives you a clearer view of core operational efficiency, maintaining that while investing so much. That's something.
And they were returning cash, too.
A lot of it. $3.1 billion back to shareholders, buybacks and dividends.
Wow.
Yeah, shows confidence, strong cash flow. We'll get into that. Another big one, cRPO.
Current remaining performance obligation.
Right. Basically, contracted revenue for the next 12 months grew 12% to $29.6 billion.
So nearly $30 billion already locked in for the next year. That provides some serious visibility.
It does. It points to customer commitment, future revenue predictability, but the real standout metric.
Let me guess, AI.
You got it. Data Cloud and AI annual recurring revenue, ARR.
What was the number?
It blew past $1 billion, first time hitting that milestone.
Okay, $1 billion is big.
But
the growth.
That's the kicker. Over 120% year-over-year growth.
120%.
Yeah.
Yeah.
I mean, this isn't just steady growth. It's explosive. And it's specifically in that AI strategy area.
So it seems like enterprises are really starting to pay up for these AI capabilities inside Salesforce.
That's what these numbers suggest, yes. It's probably the clearest signal yet.
Okay. And quickly, the other key numbers. Subscription revenue.
Subscription and support, the core, $9.3 billion, also up 8%.
And cash flow.
Free cash flow, $6.3 billion, up 4%. So solid foundation supporting that AI surge.
All right, let's dig a bit deeper then. That $9.8 billion total revenue, 8% growth, seems steady.
It is, and like we said, the subscription part, $9.3 billion, makes up, 95% of the total?
Yeah, almost all of it. That recurring model is just so powerful.
It gives them huge resilience. Now, profitability. The GAAP operating margin edged up a bit, 19.8% from 18.7%.
Okay.
But that non-GAAP margin, the 32.3%, stayed really strong. So even with heavy investment heading GAAP.
The underlying business efficiency looks good on that non-GAAP basis.
Exactly. They're managing costs effectively while still investing.
Got it. And net income was $1.54 billion, up just 1%.
Yeah.
But EPS.
Earnings per share, yeah. Diluted EPS was up 2% GAAP, but up 6% non-GAAP.
And that 6% non-GAAP jump. Partly from buybacks.
Definitely boosted by the share repurchases, fewer shares, same income, higher EPS. It's a standard lever for mature tech companies.
Let's circle back to cRPO for a sec. That $29.6 billion, up 12%. Beyond just pipeline, what's the story there?
Well, it suggests customers are signing bigger deals, maybe longer contracts.
Inviting more budget.
Right, committing more for the year ahead. It kind of pushes back against the idea that businesses are drastically cutting cloud spend, at least for platforms like Salesforce. It shows stickiness.
Makes sense. And the cash flow was obviously strong enough to fund that $3.1 billion shareholder return.
Oh, yeah. Operating cash flow, $6.5 billion. Free cash flow, $6.3 billion, both up 4%. And that cash is crucial, right? Not just for the returns, which were $2.7 billion in buybacks, $402 million in dividends, but also for R&D, maybe future M&A.
Gives them flexibility, dry powder.
Exactly. Cash is king, and they generate a ton of it.
Okay, let's slice the revenue differently. How did the products and geographies perform? Where's the growth coming from?
Looking at the product clouds, Service Cloud was actually the largest, $2.33 billion, steady 7% growth.
And Sales Cloud, the original CRM.
Right behind it, $2.13 billion, also up 7%. So these huge core businesses are still growing consistently.
But the faster growth was elsewhere.
Yeah. Platform and other, That was up 14% to $1.96 billion.
And that includes things like the core platform app exchange.
Exactly. Developer tools, low-code, no-code stuff suggests customers are building more on Salesforce, which is, a good sign for stickiness.
And integration in analytics,
Yeah.
Tableau, MuleSoft.
That grew 10% to $1.54 billion. Makes sense, right? You need to connect data for AI.
Definitely reflects that need to integrate systems and analyze the data.
The slower area was marketing and commerce, only up 3% to $1.33 billion, or 4% in constant currency.
So core CRM and service are solid, platform and data are accelerating, but marketing and commerce may be facing tougher competition or budget scrutiny there.
Could be. It's certainly an area to watch.
And geographically, how did that break down?
Americas is still the biggest chunk, no surprise. 66% of revenue, $6.47 billion, grew 7%. Steady for a mature market.
Europe
actually showed pretty strong growth, up 9% to $2.34 billion. That's about 24% of their total revenue.
in Asia Pacific.
Fastest growing, up 10% or 11% constant currency, hitting $1.02 billion. Still smaller at 10% of total, but the highest growth rate.
So while the U.S. drives volume, the international markets, particularly APAC, are delivering that faster growth percentage. That diversification must be important.
Oh, absolutely. It builds resilience. And seeing strong growth outside the U.S., especially in Europe, despite potential headwinds, suggests their international strategy is working. Lots of runway there.
Okay, let's pivot back hard to AI and Data Cloud. Because that $1 billion ARR, 120% plus growth, that feels like the main story.
It really does seem to validate the whole strategy, and they're giving specific examples now, like Agentforce.
Their AI agent platform.
Right. Over 8,000 deals closed since launch. And significantly, about half of those are paid deals. So it's moving past the tire-kicking phase.
And they're using it internally too, right, on their own help site.
They are. Handled over 750,000 requests, they said. And it apparently reduced their actual support case volume by 7%.
That's a concrete ROI they can show customers. Look, it worked for us.
Exactly. It demonstrates the potential for automating customer service. And it seems widespread. Nearly 60% of their top 100 deals in Q1 included Data Cloud and AI components.
60% of the biggest deals. Wow. And you mentioned multi-cloud adoption too.
Yeah, more than half of those top 100 deals involve 6 or more Salesforce clouds.
So customers are buying deeper into the whole integrated platform, not just point solutions, which probably pulls AI along with it.
That seems to be the idea. And the scale of Data Cloud itself, just mind-blowing. 22 trillion records ingested in Q1 alone.
Wait, trillion with the T.
Trillion with a T, up 175% year over year. Think about processing that much data.
That scale is incredible. It positions them as this central data hub, which you absolutely need for effective AI.
Precisely. Good AI needs good, accessible data. That scale makes them fundamental. The CEO called it a deeply unified enterprise AI platform.
Combining Agentforce, Data Cloud, the Customer 360 apps, Tableau, Slack.
All integrated. And this is where that planned Informatica acquisition comes in.
Right, the data integration company.
The analysis highlights it adds critical AI-powered master data management, MDM, and ETL capabilities. Extract, transform, load.
So it bolsters the underlying data plumbing, essentially, making it easier to feed the data cloud and run AI.
That's the idea. They want to create, quote, the most complete, intelligent AI and data platform for the enterprise. It plugs potential gaps in that data management layer.
Looking at the operational side in the outlook, they manage costs well, right? Operating expenses were 57% of revenue.
Yeah, kept under control despite heavy investment. And a key part of that investment, R&D, was 15% of revenue.
That's a pretty big slice for R&D.
It is. Highlights the focus on innovation, especially AI and platform development. Sales and marketing, also big, 35%.
Stock-based compensation ticked up a bit, $814 million.
Yeah, often linked to talent acquisition and retention, particularly in hot areas like AI. There were also some restructuring charges, about $36 million.
Usually about long-term efficiency gains.
Right, streamlining things to support continued investment in strategic areas like AI.
Okay, let's talk guidance. They updated the full-year outlook for FY2026, and they raised it.
They did. Revenue now expected between $41.8 and $41.3 billion. That's 8-9% growth. And importantly, they raised the high end of that range by $400 million.
Raising guidance after just Q1. That signals pretty strong confidence from management.
It does. It suggests they expect the Q1 momentum, especially around AI and Data Cloud, to continue. They seem confident in their execution despite, the broader economic uncertainty.
And they guided subscription and support growth around 9.5% for the year.
Yep. Non-GAAP operating margin target is 34.0% and cash flow growth expected around 10-11%.
Okay, and Q2 guidance lined up with this?
Yeah, Q2 revenue projected $10.11 to $10.16 billion, same 8-9% growth ballpark. EPS and cRPO targets also align. They did mention a potential currency tailwind, too.
Helping them a bit.
Could add about $250 million for the full year based on current rates.
And crucially, this guidance doesn't include Informatica yet.
Correct. That deal isn't expected to close until early next fiscal year, FY2027. So the raised guidance is based purely on the existing business momentum.
All right, let's synthesize this. What are the big opportunities and risks the analysis points to?
Opportunities. Agentforce getting traction is huge. Hitting that $1 billion AI data cloud ARR with massive growth. The potential synergies from Informatica, assuming integration goes well.
Plus international growth.
Right, especially APAC showing strength. And the multi-cloud deals getting bigger, showing platform stickiness.
Yeah, the risks?
Intense competition, always there in cloud and AI. Macroeconomic uncertainty is still a factor. Integrating Informatica will be complex.
Yeah, big integrations always carry risks.
For sure. Plus, potential customer pushback on costs and the ever-present regulatory focus on AI and data privacy.
So the overall take from the source material?
Pretty glowing, actually. Exceptional Q1 beat expectations significantly. Strong validation for the AI and data cloud strategy. Agentforce is a standout.
And the guidance raise shows confidence.
Exactly. Robust cash flow, shareholder returns, strong cRPO. It all paints a picture of operational strength and good visibility.
But areas to keep an eye on?
Definitely that slower growth in Marketing Commerce Cloud, how the Informatica integration plays out, maintaining the edge in AI innovation, balancing R&D spend with margins, and ultimately how deeply customers adopt these new AI tools long term.
Makes sense. But the headline is a very strong start to the year for Salesforce, really fueled by that AI and data cloud execution. They seem well positioned.
Agreed. And, standard disclaimer. This analysis is informational, not investment advice, based on the Q1 materials at the time. Things can change.
So yeah, the core takeaway really feels like Salesforce is backing up the AI talk with actual significant revenue growth, that $1 billion ARR milestone.
And the 120% plus growth, it shows enterprises are buying in, they're embedding this stuff.
They are. And it leads to that final thought. As companies like Salesforce push AI deeper into core platforms and bolt on things like Informatica to manage the data, what does that truly integrated AI enterprise look like down the road?
How does it fundamentally change business operations beyond just automating tasks?
Right. Is it a complete workflow transformation? It's a massive shift, and clearly Salesforce aims to be right at the center of it. Something to keep watching.
Absolutely.
Well, thanks for joining us for this deep dive into Salesforce's Q1.